A frequent target of the president, taking another hit today. President Trump once again berating Fed Reserve Chair Jerome Powell for refusing to lower interest rates.
I call him too late. He's too late all the time. He should have lowered interest rates many times. This guy is a numbskull. He keeps the rates too high and probably doing it for political reasons.
But Powell also got a rare nod of approval from inside the administration. Today, Treasury Secretary Scott Bessent actually praised him despite intense pressure from many in the White House for Powell to step down. CNN's Vanessa Yurkevich is tracking all of the developments from New York on this. Vanessa, tell us a little bit about what the Treasury Secretary had to say and if Powell's job is still safe.
Yeah, well, the Treasury Secretary, Scott Bessent, was actually in the Oval Office when President Trump made those statements. And he chimed in by saying that he does believe that the Federal Reserve needs to undergo an internal review, especially around expenses and finances. He says that the Federal Reserve spending has quadrupled in recent years, and the administration has really latched on to this renovation, a $2.5 billion renovation of the Federal Reserve's headquarters in Washington, D.C., calling it out of scope and out of budget, really criticizing Jerome Powell over this. But the Treasury Secretary went on to say a little earlier today that he believes that monetary policy should be kept in a jewel box and should be protected. And that really goes against what President Trump has been saying, which is criticizing the Federal Reserve and calling on them to lower rates. Also earlier today, he was asked whether or not he agreed with the president and others that Jerome Powell should resign. Listen to what he had to say.
There's nothing that tells me that he should step down right now. He's been a good public servant. His term ends in May. If he wants to see that through, I think he should. If he wants to leave early, I think he should. But I think there's a real chance here for him, for his legacy to be that he right-sized the non-monetary policy functions of the Fed.
So some praise for the head of the Federal Reserve, Jerome Powell there. One thing, though, that Secretary Bessent agreed with President Trump on in the Oval Office earlier today was he does believe that the Federal Reserve should lower interest rates. The Fed has not made a rate cut since December of last year. This is something, obviously, that President Trump has been calling on for months now. The Federal Reserve is slated to meet later this month. All eyes will be on this big decision that will have serious impacts from the position of the president and what he will feel about it, but also it will certainly impact Americans and interest rates that we pay on everyday things like mortgages, cars, credit cards, and student loans. So all eyes on that critical meeting in the next coming days, Brianna.
All right, we'll be watching. Vanessa Yurkevich, thank you so much. Jim?
All right, let's speak more about the economics of this. With us now, Business Journal, host of Public Radio's Full Disclosure, Robin Farzad. Thanks so much, Robin, for joining this afternoon.
Thank you, Jim. Thank you.
So President Trump says it's a booming economy. Typically, though, if the economy is truly booming, and by the way, some of the signs are quite strong, there wouldn't then be a great need to cut rates immediately, would there?
And indeed, look at the lesson of leaving rates too low for too long, right, coming out of the pandemic. And in hindsight, I think the Federal Reserve would admit that this was not transitory, that they should have mopped up that excess cash maybe a year in advance, and we wouldn't have this difficulty of kind of sticking the landing right now. Inflation is still in the system. Do you want to add fuel? Do you want to add an accelerant to it right when we are on the brink of potentially arresting an inflation the likes of which we had not seen in 4 decades? I mean, it's one thing to be a politician out there. Everybody loves low rates. Everybody loves low cost of capital, lower, mortgage rates, credit card rates. But it's another thing to have to deal with the back end of that.
So you have a president quite publicly attacking the chairman of the Federal Reserve, who he appointed, by the way, and even seeming to stir up these claims about using money badly to renovate the Federal Reserve headquarters here. Are we seeing a threat to the independence of the Fed?
Absolutely. The likes of which you have not seen in the modern Fed era, I think in the period of 1913, 1917 to the present. There always used to be a burlesque of kind of, you had to, the Fed would only telegraph certain things. We used to look at the size of Greenspan's briefcase walking into these testimonies on Capitol Hill, and whether you were a Clinton or whether you were a Bush, whether your person was appointed by Reagan, the Fed chair, you just did not go there because it's too important a project, this tens and trillions of dollars of economic power in this country, that if, for example, someone like a Bernanke, if he was talked down by the Bush II administration during the financial crisis, do you imagine how difficult it would be to sell that bailout to Congress? How difficult it would be? You have to speak with a unanimous voice. And I think that's the first world luxury we have right now, is that we're not in a recession. We're not in a financial crisis. And so, yes, you can, in theory, call your central banker a numbskull, but it will not help when and if times collapse.
So tell me how the markets might react to this, right? I mean, the markets did prove to be something of a backstop early on, for instance, in Trump's trade war. As you know, even he referenced it, right, that the bond markets got a little bit touchy, and he backed off, seemingly under the advice of Scott Bessent. Would you expect the markets, if Trump were to successfully force him out, react negatively to that?
Pay attention not just to the stock market, because it's, secondary, tertiary readings, but the bond market.
Yep.
And if we're being punished for our profligacy, if we're being punished for politicizing it, there used to be these people called bond vigilantes, 35, 40 years ago, who would punish us for this and demand higher and higher rates. We're kind of dancing on the edge of that right now. And I doubt someone like Donald Trump, whose vested interest is, after all, if you're adding so much to the deficit, to maybe pay less in interest. Of course you want lower interest rates. But if the bond market comes out and punishes you for politicizing this, you will back off.
Yeah, I mean, it was the bond market that got the jitters right early in the trade war. Who was it who said he'd like to come back as the bond market? That's real power. Anyway, Robin Farzad, thanks so much.
Thank you, Jim.
Joining us now to discuss, Princeton University economics professor Alan Blinder, former vice chair of the Federal Reserve and member of President Bill Clinton's Council of Economic Advisors. Professor, thanks for joining us. So as we know, Jerome Powell is still, in fact, as of right now, the Fed chair, despite a fake letter of resignation that Republican Senator Mike Lee and some MAGA influencers were circulating. Lee then deleted it from his social media today. Do you think that Fed Chair Powell should step down in order to preserve the independence of the Federal Reserve, as we just heard suggested?
Definitely not. That gets it exactly backwards. The worst thing he could do from the point of view of preserving the independence of the Fed would be to step down for this reason. It's one thing if he has a health problem or something like that, but he doesn't. He's very fit and perfectly capable to keep on going. And if he quits now under this kind of pressure, there goes the independence of the Fed.
As you know, the decision to cut interest rates is not on Jerome Powell or any Fed chair alone. It belongs to the Federal Open Market Committee. Do you think the president has reason to believe that the committee would be more open to lowering interest rates without Powell in the picture?
No, I actually think the opposite. I think if he actually would manage to fire Powell, which is probably illegal and he can't do it, but suppose that it happened, there would be such a reaction on the Federal Open Market Committee that it would be harder and harder to get them to cut interest rates.
And as you know, he has said that they probably would have voted to lower interest rates if it weren't for the instability created by President Trump's tariffs. The committee's meeting next week. Powell said after the last meeting the door was still open for a rate cut later this year, depending on economic conditions surrounding global trade. Do you think we could see interest rates fall next week, or do you think it's more likely to be in September?
I think next week would be a very big surprise, and given this flare-up right now, a really, really big surprise. I think it comes later, if indeed it comes this year. It's a reasonable bet that it'll come sometime this year, but not next week.
Do you think President Trump's push and for interest rates to be lower and his continued attacks on the Fed chair actually works against what he wants? In other words, is there anything in being on the Federal Reserve where a president is jawboning and insulting you, and in order to show that you are independent, you actually don't do what he's saying?
I think that's right, a little bit. I mean, mainly Powell and his committee members are going to do what they think is right for the economy. But at the margin, rather than look like they're getting bullied by the White House when they shouldn't be, they may stiffen their backs a bit.
Yeah, we're all human, after all. Trump's push to lower interest rates comes,
we are.
it comes weeks after he signed that domestic economic bill into law, the One Big Beautiful Bill Act. On July 4th, the Congressional Budget Office finds that this final legislation could add more than $3 trillion to the deficit over the next decade by continuing the tax cuts and such. Will lowering interest rates help ease some of the economic strain that might hit the government budget over the next decade, or does the U.S. need to be doing much more?
I think it's the opposite. I think what's happened in this beautiful, beautiful, I laugh, bill is mainly raising the annual deficits, and that tends to push interest rates up. I don't want to exaggerate it. It's not going to push them up into the stratosphere, but at the margin, it's pushing interest rates up, not down.
All right, Professor Alan Blinder, thank you so much. Appreciate it, sir.
You're welcome.